Hello everybody and welcome to our weekend market briefing for Sunday, June 26. Let's jump right into this because this is we had an exciting week last week, and let's see if we think that'll continue, where we're going from here. But first, of course, our disclaimer: everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions and are not to be considered advice to buy or sell any security, and all trading and investment decisions are your own and done at your own risk. Okay, so coming up this week, starting on Monday, tomorrow, core durable goods orders and pending home sales. Both kind of measures of how the economy is doing. Is the economy going to slip into recession? Is it maybe just cooling off a tiny bit? We can get hints to those, the answers to those questions, from core durable goods, and also from how home sales are doing. If home sales fall off a cliff, market's not going to be happy about that because it's going to be worried about the economy falling into recession. If home sales pull back a tiny little bit, I think the market's okay with that. I think the market actually probably be happy with that because it is potentially disinflationary. On Tuesday, we have CB consumer confidence. This is really important. What do consumers think about the economy? If consumers are bearish on the economy, if consumers are unhappy, well, they're not going to be spending their money. If they're not spending their money, then all the companies we invest in won't be making as much money. So we want a confident consumer, but not too confident. There's a Goldilocks print on this one, I'm sure. On Wednesday, Jay Powell is speaking at the ECB, that's European Central Bank, the ECB Forum, on central banking. This is happening in Portugal. I'm not sure if he's actually going to Portugal or if he's just doing it online. But anyway, he's speaking along with a bunch of other central bank heads from Europe and around the world. So that's a big deal. So that's happening on Wednesday. Thursday, another big deal. We have core PCE price index. This is kind of the Fed's CPI. The PCE is the one that they look at, and PCE stands for personal consumption expenditures. So this is like how much is the consumer spending on things that the consumer buys. It's their inflation measure, so they say. So the market will be watching this really closely. And on Friday we have ISM Manufacturing Purchasing Managers Index, another tool to give us a hint at inflation and the healthy economy. So a lot of data this week, important data every single day. So that could bring some volatility into markets. What else we've got? Still pretty light on earnings. Monday after the close, we've got Nike. That will definitely be one to watch. Not really much that I see on Tuesday that's very interesting. On Wednesday, however, before the open, Bed Bath & Beyond. High short interest in that. So I'm going to probably post the ratio backspread strategy for high short interest earnings that you've seen me talking about and done a couple little videos on recently. So look for that on Tuesday in the options channel. Don't see anything really after the close on Wednesday that interests me. Maybe Constellation Brands before they open on Thursday. Micron, very interesting on Thursday after the close. That could have a real effect on the whole semiconductor space. I really hope they get it together, these guys. I really hope the whole space gets it together. But we'll take a look at the semiconductor chart in a little bit. Okay, so next up, we're going to take a look at the markets. We're going to start, of course, as we always do, with the S&P 500, which is going to be coming up right here. All right. So you can see this has kind of been looking a little bit messy. You know, we've found support at levels that we really needed to. This 365 was a really important place to find support. We did that, well, week before last actually. But so this past week, and certainly, you know, by Friday, we've really started to move up here. Now on the way down, we left a whole bunch of gaps, and I started, you know, drawing in some of these gaps. And then on the way back up now, we've left gaps below price. And that's a little bit scary because a lot of people, you know, talk about how gaps have to get filled. So there is a cohort out there who figures that price is going to come back and fill this gap, and then come back and fill this gap in here. Or this gap was, I guess, partially filled now. But they'll be looking for these gaps to be filled, these gaps below price. Now, it's not true that all gaps are filled. If this is a bottom, if this truly is a bottom, and price continues to move up from here and we rally, we'll never see these prices again. You know, if we go into a new bull market, we won't come back here, and we don't have to come back here. Now, I'm not saying this is a bottom. This could be a bottom. But right now, all this is a counter trend rally in a bear market. That's all it is. We've seen these before. We've had a number of them before. We had this one here fairly recently, right? Less than a month ago, 3 weeks ago. We had this one back over here a couple of months ago. We even had a small one right here. So we've had plenty of these counter trend rallies. This is what bear markets do. They have big, strong rallies. But this day on Friday was outstanding, and the whole week really, because we had a terrible down week the week before. It was a massive down week, and this week we had a massive up week, and we eclipsed, and we took back everything we lost in the week before, plus a little bit. So that's quite bullish. That's you know, makes me happy. We closed one of these gaps. Now we stalled right at around the 21-day moving average and the top of the gap. But what happens quite often is when you get into the gap, you'll move fairly quickly inside the gap and then stall out at the boundaries of the gap. So maybe on Monday, you know, we come up when we move up to the next gap, or we move up to the bottom of the next gap on Monday, and maybe on Tuesday we break through that, if this rally is going to continue. But remember, this is, you know, while this could be a bottom, right now all it is a rally in a bear market, and we need to be careful. But this does look like it's going to continue. You know, unless there's been, you know, major news catalysts over the weekend, and I haven't seen any yet. So, but you know, a lot of stuff can happen on Sunday night while we're all sleeping. What else did I want to show you on this chart? So we got the gaps. Yeah, I think that you know, we watch for this to continue, and I wouldn't be terribly surprised if it moved up into this, you know, 408 to 410 zone. Up in here, I think is a good initial target for this rally. I think it's got a little more in it. How's the NASDAQ doing? Now the NASDAQ's doing a little better. It outperformed a little bit this week, so that's really nice to see. And because there was really nice moves in large cap tech this week. We'll see when we look at some of the FAANGs. So here we are with the NASDAQ on our chart. We're about to pick off this downtrend. We've just ever so slightly moved into this gap. So, you know, we do have a fair bit of resistance overhead. And then we've got that previous consolidation there. So we've got to watch out for this. There is a lot of resistance here, but we do have some really good momentum. So maybe we can carry this through. IWM, the Russell Small Caps. Considering their rebalancing, reconstitution on Friday, it was a fairly quiet day for stocks in general. I mean, you can see we had a bigger than average volume on Friday, but that reconstitution day usually has really big volume. So that's interesting. Now, We've moved into the gap here. We've got that 21-day moving average overhead, so that's something to watch out for. But again, hopefully we can just, continue to pick off all these gaps, get these gaps closed, and then, maybe get up into here and start consolidating and see what happens next. This is sort of like when we're trying to figure out, is this the bottom or not? Or is it just, another, bear market rally? It's that first pullback, or what happens when we lose momentum? Do we go all the way up into here, move sideways, and then go up, or do we do what we did recently? Where this moved up into here, went sideways, and then fell apart. I want to go back to the SPY because I wanted to show you how similar what's going on now is to what happened over here. Okay. So, look we had this sort of messy bottoming action, and that's, lots of sort of gaps and wicks and that sort of thing. We had that here, and we had, similar thing here. And then we started to move out of that. And you can see we're trying, moving out of that here with these 3 bars and doing the same thing with these 3 bars. Then we get this nice big green bar. There we have a nice big green bar. And we had another nice big green bar. Up into kind of an area of minor resistance. Well, if we have another, nice big green bar, it's going to take us up to probably the top of this gap here. So it's the price action right now eerily similar to this previous one, and so the hope is obviously that when we do consolidate and go sideways, that we break out to the upside of it, not the downside like we did here. We don't want to see another one of these waterfall kind of days or weeks, I should say. Okay, but this is what I'm wary of right now. While I do think this rally continues, there's stuff to watch out for here, and definitely reasons to be cautious. Let's look at we did the small caps. Let's look at the micro caps. Microcaps gapped up, but didn't move, much. They're kind of underperforming, so we have room for rotation. We've had some really good moves in large cap tech. So maybe what could happen here is we could rotate from that large cap tech without them falling down a whole bunch and into some of the smaller cap and micro cap stuff, and let these catch up. That would be healthy. That would be really healthy for this rally. All right, so we look at VIX. VIX is falling, as you could imagine. It's been coming down nicely for well over a week now after touching this upper trend line here, and we're coming down near the bottom of the trend line and near the bottom of this sort of consolidation within a consolidation within a consolidation. Be really interesting to see what happens when we get down in this area, in the 26 area, but it's really nice to see that we're below 30. Let's stay down there, and if we can get below this trend line, I'll be quite happy. Okay, 10-year yields. You can see those yields came down this week. That's great. That's good news for stocks. Seems to have found some support at the 50-day moving average though, but a little indecisive in here. Be nice to see this stay below this former pivot, below that former gap. We don't need this gap in here anymore because that's been filled. Yeah, it'd be good if this just kind of goes sideways or rolls over. That would be good for equities. The dollar index. Let's pull up. Whoops, that's not the one we want to look at. There we go. Here's the dollar index. You can see that this is sort of continuing to flag. You could definitely call this a bit of a bull flag here. We would expect this to break out the upside of this pattern. So we'll be watching this. I'd rather see this break to the downside. That would be better for equities, better for some of the commodities too. But yeah, watching this closely. A sharp move up here, bad for stocks. So a slow move down should be pretty good. Let's see. Let's take a look at our dollar cost averaging timing tool. Now you can see 1 week does not make a trend change, right? So we're looking at a weekly chart, of course, with our timing tool. You can see the MACD here. It hasn't even turned up in this week. Momentum has been just so heavy to the downside. Even with this strong week up, it still hasn't turned that MACD line up. You know, with another up week, we will see this turn up. Probably not enough to cross over, though. We need still got a lot of work to do here before this flashes a buy signal at us. So we'll keep our eye on that. Commodities. Let's go back over here. Okay. So gold, not doing much. I can see that the futures markets just opened about 20 minutes ago, actually. And you can see the gold had gapped up, but it's pulling back now. It's down near the bottom of this range. You know, this is hanging out down here is good. Hanging out down here is telling us that, you know, inflation maybe it's telling us that inflation worries aren't as bad as they have been. If people were still freaking out about inflation, this would be going up, not down. The gold miners, they're down the bottom of this you know, long-term range. Major support level here, though. So, you know, we would normally expect to see a bounce here. But you know, not if gold's pulling back, we're not. But you know, this is a fairly bullish candle here, right at support. If they start buying the miners, then gold should be going up as well. Silver down at near lows, so that's good as well for you know, for inflation expectations. Copper's the one I'm not happy with. I mean, this really kind of fell apart, and coppers are sort of bellwether for the economy. You know, when copper's falling like this, people are not expecting the economy to do well. So this is definitely building in all these recession fears. You can see building in here. But it looks like we're trying to bounce here. We're trying to bounce right at a support level. Now this is, you know, this is a minor support level from the past. This 350 level is much more important to hold. But you know, let's take it. Let's bounce from here. If we're bouncing from here, then you know, it's maybe telling us that the market is perhaps expecting a soft landing. That recession may not come. That maybe the Fed can pull this off. The general commodities index, you can see that has fallen off, and mostly with oil, of course, coming into a little bit of support, but kind of looks like it's taking a break, you know, kind of a one-day break before another leg down. Hard to say where this ends. I expect to see more downside in this. Maybe down to 26, maybe even lower than that. Might have to come back to one of these former trend lines we see down here in blue. And the agricultural commodities fell apart quite steeply. You know, so I mean, one of the good things about, you know, seeing these commodities pull back is this is disinflationary. You know, we need to see lower fuel prices. We need to see lower food prices if we're going to get inflation under control. And these charts, these commodity charts, are saying, hey, lower prices. You know, here are your lower prices. If the prices of the commodities are coming down, the prices that these, you know, suppliers and manufacturers are paying are coming down, that will eventually work its way through the economy. So that's important to see. As you know, as much as I'd rather see energy just rip, you know, commodities pulling like this, back like this, is good for stocks. All right. Yeah, and speaking of commodities, our favorite commodity, oil. Oil pulled back quite a bit this week. Put in a bit of a lower low there at down about 18%. Over about a week and a half there from that high. Had a nice bounce on Thursday and taking a bit of a break on Friday. So where do we go for here? I think we've still got another leg down in oil before all this is over. And, you know, so maybe that means it comes down here to 95. That support level. I suspect it'll probably overshoot that. Maybe it's got to come down to this 200-day moving average, which is right on this trend, this long-term uptrend line. Where's that? Oh, yeah, right. The oil chart's so messy from that going negative in COVID. But yeah, so this uptrend started back in November of 2020. Pullback back to there would not at all be unreasonable. XLE, pretty much the same thing. XLE has pulled back more than oil itself, and you know, it's found some support here. I don't think this is going to hold. I think this is just, you know, it's taking a bit of a break today, and there's going to be another leg down, and we're going to continue lower on here. This, you know, this trade could be completely done. It's hard to say. I kind of think it's got one more leg up in it though, but I think more downside first. And you can see that in you know, the oil producing companies are really kind of leading the way to the downside, and they're very near the ETF for these is very near the 200-day moving average. Losing that will definitely put another down leg in, probably down to around 103 on this ETF. In fact, let's draw that level in. Right about there, 104-ish, 105, somewhere in that area. Oil services, same idea here. Really fell apart. Big move down here in the oil services ETF. You know, crashed through its 200-day moving average and its potential support, and, you know, probably going to be looking for another level of support down here, maybe at this 210 level. But yeah, probably find support somewhere between 210 and 200 on the oil services. All right, so consumer discretionary, things are looking better here. Nice move up over the last week. Looks like it could go further. The real resistance comes in, you know, sort of between, you know, around this consolidation here or the 50-day moving average. Wouldn't be surprised to see it get up to that 50-day moving average before it takes a little break. Hopefully just goes sideways and then continues higher from there. Industrials, they had a really good day on Friday. Broke out of this little consolidation that they were in. But really it's just sort of one good day on these industrials, right? Definitely got some work to do, a whole bunch of gaps here to fill, so there's definitely resistance overhead in the industrials. Financials, kind of the same story. They had a great day on Friday, broke through resistance, you know, former support becomes resistance, broke through that, closing some gaps, and you know, it's really hopeful to see this kind of day in financials, and a lot of the companies within that ETF did really well. A lot of the banks have done really well, and a lot of the non-bank financials have done really well, and that's important. We're not going to see this market go anywhere if financials are falling apart. So we need to see some recovery in these financials, and we may be seeing that at the beginning of that, or we're just seeing a bear market rally. We need more time on this when we need to see what happens after the first pullback. But so far, looking good. And you know, if we look at companies like, I just picked a couple of random ones. Goldman Sachs. You know, nice move here in Goldman Sachs, coming out of a consolidation here. You know, there's definitely a nice solid bottom there, and then broke out of that. You know, ripped right through that 21-day moving average. Looks like this could go, you know, much higher. This could continue. This momentum could continue here. Visa, a non-bank financial, also doing really well. This is doing a little better than the banks. You know, it kind of, we had this nice green reversal day back here, consolidate for a few days, and now a nice big ripping day. Stalled out at the 50-day moving average, a little bit of resistance. That's all right. You know, if the rest of the financials are moving, this probably moves along with it. Otherwise, you know, maybe this just moves sideways here for a day or two, takes a little break, and then continues the move up. Technology had a really good week. very similar to that that Visa chart we just looked at, right? Where it had that reversal day, it had some green consolidation days and a nice big day up. Still has some gaps overhead, some resistance overhead, but it has momentum on its side right now. Good volume on Friday. Semiconductors. Not quite as good. I mean, we had nice green candle, but we're still in this very messy consolidation. We've got this gap up here to close. We've got some resistance overhead. Hopeful, but it's it's got to get to work. Everything else is getting to work. Well, maybe not everything else, but lots of other stuff is getting to work. And our semiconductors are kind of lagging a little bit. So let's get into this gap. Let's move through this gap and start picking off some of these levels up here. And maybe that happens with what was that on Thursday? Maybe that happens in anticipation of Micron's earnings on Thursday, I think it was. Communications sector had a pretty decent week as well. Broke out of a little consolidation, made a nice leg up. Should be able to make another leg up into here where it will find a little bit of resistance. All right, on to the FAANGs. Let's take a look at Apple. Really nice week for Apple. Came off this bottom here, found some support just above this minor support level, making moves up. Really good momentum here. Will this continue? So obviously there's lots of resistance overhead here, but it's got some really nice momentum. Amazon looking good. We had this like triple bottom here and this little cluster of bottoms here, cluster of lows, and we've moved off of that, moving away from there nicely. Sure it would be nice to to come up and get to this gap zone and then get into the gap. Gets into the gap, then it's put in a higher high, right? We can start saying, hey, maybe this is a trend change. But it's a long way to the gap still. But I've seen so many bottoms start like this, with this W like this, right? You start drawing this W, and you start crossing your fingers and getting hopeful that this is it. Definitely worth keeping an eye on Amazon. Netflix, not anywhere near as strong as the others, but definitely putting in some bottoming action. It's got there is a little bit of the W there, but it's got this nice big kind of flat base. I think it needs this after this giant gap down, and basically Netflix has been very unhealthy. I think the more amount of time this spends going sideways, the better. But it could also start stepping up. If we come up into here and then we step into here and then we do another base like this, even if it takes a couple of months, right? Put that base in over here, that would be very healthy for this stock. Google. Google had a really nice day on Friday, and much like like most of the other FAANGs, it started that move earlier, or I guess a week ago Friday, and had the consolidation before the big move on Friday. Needs to get above here, so we can put in a higher high, so this would be nice, right? We've got the low, we got a higher low, we need to put in a higher high. Tesla. Tesla is lagging a little bit. I'm going to sort of move this downtrend line up to here. Does seem to be breaking that downtrend though. Looks like it wants to break out to the upside. I think if the market's moving up on Friday, Tesla's going with it. Or Friday if the market's moving up tomorrow on Monday, Tesla's going with it. Let's see if eSignal has fixed the Facebook chart yet. And no, they have not. I'm going to have to send them another nasty note tomorrow. I can't trust this chart. I don't know what happened. Well, the symbol change has completely messed up this chart on eSignal. So I just don't know if I can even trust this. let's go over to TradingView. All right. Yeah, okay, so the price was right on there. Yeah, things are not looking ideal in Facebook land. Sure, it had, it had one good day on Friday. It, needs to do a lot more than that. It'd be interesting here. I mean, we could get an island reversal, I suppose. If this was to gap up on, tomorrow, we'd have what's called an island reversal, and that would be a nice little bottoming pattern. Anyway, let's go over to healthcare. Look at this move in healthcare. We were looking at this. We looked at this hammer last week, I believe, and then we just got this massive move up. This is fantastic. It probably needs to take a break here. I'm not sure how big this move is. From this low to where we are now, 9%. Well, that's not too bad. It is a fairly big move for an ETF, but not bad. But we do have resistance overhead with these moving averages, and then this resistance here. Maybe this thing can keep moving up into here before it starts going sideways. Biotech. Biotech, we talked about watching closely last week. We looked at that hammer. We looked at the day following the hammer. We looked at the volume on that day. And so hopefully somebody got in here. Once it gapped up above that 21-day moving average and started to go, that first day of that trade would have been a little sketchy when it pulled back, but the next day you would have been pretty happy, and the day after that. Now we've got a little bit of indecision here, although when it did pull back, you can see buyers stepped in and they bought it right back up again. So this is good. We might have some more up in this. And this is a fairly large move. This is percentage-wise, this is pretty big. What do we got here? Yeah, 24% in about a week. So this can take a well-deserved rest. Whoops. It can take a well-deserved rest. Maybe it rests right here. Maybe it gets right up in here before it rests, but if we go sideways for a couple of days and then break out higher, you could easily get another big move like this. Things are definitely heating up in biotech land. And ARKG, we talked about that as well. It has broken out nicely out of this space. Another place that might be worth a look. REITs. So even the defensives had nice moves last week. So so it's showing us everything in the stock market. Anything equities was moving nicely last week, as long as it wasn't energy. Staples moving nicely as well, coming off those lows. And utilities, after that massive move down, have had a really nice rebound. So coming into some resistance though, and I wouldn't be at all surprised if utilities stall out here and start going sideways. Let's get a fib on these and see kind of where we're at. We come from just the start of that move down. Yeah, see how we've got you've got your 50% retracement, the 200-day moving average and the 21-day moving average all in this same area. Would not at all be surprised if that stalled out there. But that's fine, utilities are defensive. We don't need to see those, skyrocket through the roof. Home builders. I think home builders had a good week. Wasn't paying too much attention to them. Yeah, they had, 3 really nice days. Coming into resistance though. I think that resistance is going to hold. But that pending home sales data, I think, when was that? That's tomorrow, isn't it? That could change that. That if that could take these home builders right through this resistance. So some of the stocks we were looking at last week, one of them was Zoom. It's got this consolidation. It looks like it's trying to break out. You could just draw this as a sideways consolidation, but there is a bit of an upward wedge here, and it looks like it's trying to break out the upside of that. Usually you see this break out the downside, so be good for Zoom if it can break out of there and also get above this 125 level. VUZI, we were watching, it didn't really do anything, and when everything else was having a great day on Friday, this is kind of having another, you know, red indecisive day, but still holding like right on, you know, it got through resistance and it's holding right there. So not sure what to make of this. It may just be that on Friday the market seemed to be so focused on the FAANGs that you know, some of these other stocks didn't really get any love. So, you know, maybe this gets some love for early in the week. Rate 8 is one that I did a quick little video on. They had earnings. There was an earnings play on that. They had earnings. They've moved really nicely from earnings. They've got a really high short interest, and it looks like we're squeezing here. You can see we've got good volume, you know, price moving up quickly. You know, another day or two like this and the squeeze could really get going. You know, if we get 2 more green candles like this, that puts us where, to about $12. If we can get at $12, we could probably spike up to you know, 18 to 20 with a good short squeeze going in this. So that will definitely be worth watching for. Eli Lilly, that we've looked at in the past. Look at that, it's finally broken out. We were looking at all these levels and consolidations and just trying to find places to get in this, and this finally broke out now. Quite a move here. So has it run out of steam, or can it keep going? Tough to say, but you can see the volume is increasing on this breakout, so that's good news for Eli Lilly and anybody who's holding it. And the last one I've got for you today is Palantir. Look at, even Palantir is breaking out of a base. You know, this is a good base here, and we had lots of, you know, little bases within bases, and a little sort of base failure here. Moved back up, didn't try and get out there all in one day, right, and then has broken out. This is kind of what we want to see. This is how breakouts work. So yeah. Probably see this go higher, you know, but it's going to need help from the market as well. It's not going to go opposite the market. If the market's moving up, this is moving up nicely too. So I think that's it. Lots going on this week, lots to pay attention to. Should be a fun week. So good luck, but just remember, you know, this still is it's a rally in a bear market. Until we start making higher highs and higher lows, this is just a rally in a bear market, and you know, there is the potential that we see more downside. So have fun, you know, make some trades, but be careful. Control your risk, because this probably isn't over yet. All right. Okay. Enjoy the rest of your weekend, everybody.